please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Still with us, Andrew Holland. Andrew, I held you back because I just wanted your thoughts on the other big cue that we are tracking, crude oil. Do you think it poses some kind of risk for our market, especially if it moves, say, above 70, 75, or do you think the market can take it in its stride?
In liquidity-driven markets, I know we'll take it in our stride. But to be honest, let's go back a few years. When the oil price was down to $20, $30, we would sit here and talk about what a great catalyst it was for the Indian economy and for the fiscal deficit, and that was a big beneficiary. We can't just say it's not going to be a headwind now, right? So. It only plays out when the negatives are there. So, the oil price will scare us when we're feeling, markets are going down. But I'm not so worried from an earnings viewpoint going forward. I'm more worried about the fiscal deficit and obviously, the impact it could have on some of the indebted companies. But the good news is that India's spent the last few years trying to fix the balance sheet. So, less worried than I would be 2 years ago. But, we think the oil price is going to 70, and I think that would be enough for the markets to, if not correct, at least not go up.
Okay, Andrew, have a good weekend, of course. Thanks a lot for joining us.
I do, thank you.
And, of course, in case we don't talk before that, wish you Merry Christmas in advance. Let's now invite Mitesh Thakkar for his technical view. Mitesh, thoughts on the volatile week, and by the end of the week, did you get a sense that the bulls were in control or bears were in control?
Good evening, Anuj. I think by the end of the week, definitely bulls possibly had an upper hand. But what is more important, and if you were to just stretch the time period of more than the last few days, I think since July, when we peaked out at about levels of 10,450, 500, I think what we've done is broadly a range. The market has neither shown appetite to go below 10,100 decisively or the trigger to get past 10,450, 500. So I think that kind of range might continue as we head towards the budget day. So every time you can get a intraday reversal from the lower end of the range, which happened yesterday on Thursday's market, and you try to go long over there and try to sell close to about 10,450, 400 odd zones. You want to go for short positions if you get signals on the upside. So I think that's the kind of market we are into. It might stretch for another few weeks. Broadly, on the few weeks basis, that's the view. But otherwise, on a short-term basis, I believe that we've kind of reversed from the lower end of the range. We might be as well heading towards the upper end of the range, and that kind of movement might play out in the next 3 to 5 sessions.
Okay, in that case, Mitesh, I'm guessing you have a couple of buy ideas for next week?
Yeah, that's the case. In fact, fertilizer stocks had a good price and volume breakout today. Most of them were buzzing good price patterns. GNS is what I've picked up. It's a buy with a stop below 465. Look for targets close to about 520. Amongst the metal names which were also very active, Hindalco appears to be giving a good reversal after a correction. So buy with a stop at 238. Look for a first target of 250. And a slightly positional come accumulation call on Mahindra & Mahindra, which on the longer term charts is looking very promising. So accumulate in the range of 1480 to about 1460. Keep a stop at 1430 and look for 1580, 1600 as your target for the next 2.5 to 3 months.
Mitesh, any thoughts on, particularly some of the PSU bank stocks which started getting weak towards the end of trade on Friday? I mean, the kind of sort of break that we were seeing on a State Bank of India, where does that leave us with respect to next week?
In fact, maybe it's one packet, which after the demonetization gains, has kind of corrected and has yet to show any appetite of reversals after hitting the immediate support zone. So State Bank of India in the last 2 weeks, on multiple occasions has hit about 308, 306, but not given a significant reversal from there, barring a mild bounce back. So maybe, we'll observe them closely for the next few days. In case they don't break the support, eventually I would believe that they should resume some kind of an uptrend. But for the time being, I think they are very close to their supports of around 2-3%, and that's the case for most of the PSU banking lots. So I would expect pray for some kind of a reversal. But if that doesn't happen, then I think it could be dragging the bank nifty as well as general sentiment on this street.
Okay, Mitesh, we've got a couple of viewer queries for you coming from social media. First one is Romesh, who has a query on BHEL. He's got 1,000 shares. He wants to know if he should buy more or exit. You know, we really request our viewers to give us the price at which they've bought these shares. Otherwise, it becomes very, very difficult to give a very generic, general sort of an advice. But anyway, we don't have his buy level. So generally looking at the chart, it's not been the best of stocks for the year 2017, Mitesh. What would you say?
Yeah, I think it's not the best of the stock in the last few quarters, and I think there's no sign of that changing either. It might give a trading rally to about 100, 110 on the upside, and that should be it. So in case if the purchase price is within 10% or 10-12% of the current market price, I would suggest an exit. I would again suggest shifting into a stock like Mahindra & Mahindra. A couple of mid-cap IT names look very promising. Stocks like Mindtree, Sonata Software, etc. I think shifting would be a good option.
Okay, fair enough. Let's move to the next query. Twitter user Chandra has bought 1,000 shares of Rain Industries at a smart price. 160 rupees is the buy price. He wants to know about the outlook. What can he expect over the next 6 months? Now, these have been gravity-defying stocks, as we all know. The good thing is that he got in a little early, Mitesh. But Rain Industries, do you get the feeling this humongous rally is stalling, or should he remain invested?
In the short term, yes, Surabhi. I think it's now getting into a range closer to about 385, 400 on the upside to about 340, 330 on the downside. I think last one and a half months have been spent in that range, and I think clearly after getting so overbought, I think the stock needs to settle down for some time. So I think that activity is still on. In case he has some kind of time horizon which is more than about a few months, I would suggest keeping a hold position over here and trail your stop loss about levels of 325. As long as that is not being broken, the medium to longer term trend will remain on the upside, and eventually that should lead to a breakout beyond levels of 400, which could see 450, 500 being tested very easily. So it might take some time, some consolidation, but I think overall trend remains on the upside.
Okay, the last query then. Twitter user Arvinder has this question on Aditya Birla Capital. He is holding 260 shares, bought them at a price of, I think, 205. And he wants a view on the stock. He is actually willing to wait even for the longer term, so wants to know what to do. Mitesh?
I've not been really tracking the stocks, unfortunately, so very difficult for me to comment on this one. In fact, I really don't have a view on this one.
Okay, fair enough. Not a problem at all. Thank you very much for taking all of the queries and giving us your trading ideas and picks for next week. Mitesh, have a good weekend. We will see you with the markets on Monday. Well, with that, we are going to wrap out on this edition of Taking Stock. Thank you very much for being with us. But as promised, we will leave you with some big voices on the market on what the Gujarat elections and the verdict might mean for Dalal Street and the way forward.
If you see the BJP perform weakly in that election, then we do see the potential increase for overall policy risk. It's interesting, if you look at the impact of state elections on overall equity market performance, if the governing party performs strongly, that does give them greater scope to push through policy initiatives, and you do see equity markets respond positively to that. And the reverse is also true. So we are very closely watching the Gujarat elections. BJP has ruled Gujarat for over 20 years now, and so the status quo environment will be expected, and so we don't necessarily see that as a positive driver of equity market performance.
We are very long-term focused, and we really do believe in the long-term secular story of India. We don't change the portfolio very frequently. Clearly, the Gujarat elections are very important and would have implications in terms of our beliefs, whether the reforms that Modi has started will continue or not. We don't think he will lose or BJP will lose the Gujarat elections, but clearly the volatility could be higher going forward if there is more uncertainty over the, political capital and strengths of BJP in the coming state elections.
It's actually not a bad outcome, because you can say that after 22 years you won again, and elections are tough and things like that. So in the end, I also think that actually if you look at it for 2019, it doesn't matter to the market that whether the wins are 300 at that time instead of 280. What if they're 250, 240? In the past, we've had with 160 a PM, and so as long as the BJP and Mr. Modi is there, how will it matter actually if it is 20, 30 seats less, let's say? So that's why I think that there's no need to draw massive conclusions if it is a victory of some
Politics tends to have a short-term impact on the markets, and longer term, it's the companies that you invest in rather than the political. Having said that, I suppose in a perverse sort of way, it would have been quite good if there was a shock. And the reason for that was not because I'm either a supporter of the BJP or Congress, is it would have probably led to a market correction, and it would probably led to some stocks coming back to better valuation, which would have given us a better opportunity to add to our positions. If they do well, as the polls indicate, I think certainly the people who've been sitting on their sidelines with cash, and really I mean domestic mutual funds more than anyone else, I think they'll take that as a good green light to add to their positions in the market at this point in time.